Good morning, everyone, and welcome to the third day of the 53rd FINEX Annual Conference. The theme of the fifth session is reflecting on a post-pandemic life in the 21st century. May I now call on our MC for today. He is the Senior Managing Director at FTI Consulting Philippines, Inc., Mr. John Balse.
Good morning, my fellow FINEX members and guests. Welcome to the fifth session of the 53rd Annual FINEX Week Conference. The theme of this year's conference is Inclusive Disruption, Achieving a Sustainable Future in the New Frontier. This year, we are rolling out a series of webinars involving prestigious speakers discussing thought-provoking topics. Our fifth session will focus on reflecting on a post-pandemic life in the 21st century. The COVID-19 pandemic has affected many companies. Businesses struggled, some companies closed down, and unemployment increased in many countries. After a year of coexisting with the virus, many companies have now made changes on how they do business to combat the effect of COVID-19. We invited speakers who are well-equipped and knowledgeable in such occurrence. Our first speaker is Mr. Philip Chu. Mr. Chu is the Managing Director of Grab Financial Group. Phil and his teams are responsible for group partnerships, investments, and the creation and cultivation of new businesses for Grab's financial services. Starting with insurance, or Grab Insurer 2 years ago, Phil's teams have most recently launched Grab Invest with its inaugural retail product called Auto Invest and Grab's payments gateway, GrabLink, in 2020. With more than 23 years in financial services, Phil's experience spans private equity, public markets, derivatives, and alternatives as a practitioner and an executive. Phil was a founding architect for the front and middle office of BlackRock's Aladdin platform and holds 2 US patents in portfolio and credit risk management. Ladies and gentlemen, Mr. Philip Chu.
Thank you very much, John, for those kind words. Let me share my screen so I can get the presentation going this morning. Shall I come over here? Okay, so very good day to everyone. As John said, I head up the investments and new businesses here at Grab for financial services. So thank you very much for inviting me for the 2021 FINEX conference today. It truly is an honor, and it's always an honor to be able to share the story for Grab to a wider audience, and especially in this period of us collectively getting out of the pandemic situation that we've been thrown into. And it might be a few more long months before we get through it, but I'm sure that as I share the story with Grab, you'll see that there are things that we're hopefully able to do very well for the community and also for Southeast Asia. So as John had said, I have more than two decades of experience in financial services with BlackRock, companies at Lombard Odier Asset Management, and also most lately at Dillman Capital Partners in the US. So what brought me to Grab? I think it is the sheer simplicity and audacity of the mission, which is to drive economic empowerment here in Southeast Asia for everyone. So Grab has actually come a very long way since its founding in 2012. We started out, as everyone knows, as a ride-hailing application. And what was it that we were trying to solve? It was really to solve a safety issue out there. Our co-founder, Ling, back then wanted a safe way to get home at night. And she would actually pretend to be on the phone with her mother during her late night drives home, just to make sure that if anything happened to her, that her fictitious mom on the phone will actually inform authorities something like that were to happen. It's a pretty difficult situation to be in. And it's just from these pain points that we were inspired to really resolve the issues to actually get to the point where safety was a norm for everyone. So from there, we started to build on top of our transportation fleet. We really grew rapidly in deliveries business before moving into financial services with the setting up of the Grab Financial Group in 2018. So what does it look like today? If you take a step back, Grab today convenes really vibrant communities of people. And these communities are consumers looking to get their loved ones from place to place, conveniently and safely. These communities are looking to bring food and groceries to their homes. They're looking to get packages delivered intact and on time. Correspondingly, if you look at it from another perspective, Grab also convenes communities of driver partners, these micro entrepreneurs throughout Southeast Asia, to earn for themselves a living for themselves and also for their families. These communities also consist of merchants, small, medium-sized enterprises, small businesses, even medium-sized businesses. Everyone's looking to bring their goods and services to these consumers who are out there, whether they are physical or whether it's virtual. We convene these communities together, and what do they have when they're together? We also have, on top of that, the ability to serve them with financial services, be it the digital wallet, payments, including pay later services as an alternative to credit cards, insurance, investments, loans, and remittances. So if you put all these things together, what do you have? You have consumers, merchants, driver partners, all working together in unison to help support each other. And Grab, with our understanding of how each each community's needs are expressed, we're able to put them together in a way that is better.
Philip, good morning. Just double checking. The slide that we're seeing now is I think it's the cover page, Grab Financial Group and your name.
Oh,
just making sure that you're presenting it.
Let me get back to the share screen.
There you go. We're currently with the 4 circles.
All right.
Thank you, Philip.
Sorry about that. I
No
am
worries.
a little bit rusty in running my own slides. Is that better? Okay,
All
great.
good, Philip.
All right, fantastic. So this is what I was describing just now with the consumers, merchants, and driver partners working together in unison. So when you have all of this together, what do you see? Hopefully, we get to the point where every single day we work towards winning the trust and the right to be in front of our consumers and our driver partners and our merchants every single day. We are there for them when they wake up. We're there for them when they want to get to work. We're there for them when they're trying to deliver something to someone that they love. We're there for them when they are ordering food. So we really hope and wish, and every single day we win the right to be there with the consumers as they live their normal everyday lives. And while we do so, I think what is important to sort of take a step back is, as we're looking at things from a financial inclusion perspective, what makes us different and how do we approach this? I think we approach this from a number of points of view. Number one, the most important aspect of what we are pushing for that is different is we want to make things accessible, lower the barriers of entry, make things smaller, so it's more convenient to be used or purchased. We want to make it convenient because everyone in the modern lives that they live with their smartphones or their computers are very, very used to very easy convenience to getting what they need. So convenience is really key to what we are able to do. And also, I think lastly, transparency. I think transparency is, if you look at it really, is part and parcel of making things accessible. To really see things up front, there are no huge amounts of details for you to go through to really understand what the terms and conditions are. We make it simple and easy so that anyone who wants to be able to access financial services should be able to get so in a way that they don't second guess themselves. So I think the other thing to keep in mind, a really solid compass for ourselves is to really see that, the power of technology can be used for many different purposes. But I think for us, we want to really focus on making tech something that is a force for good for Southeast Asia. There are three vectors that we really look at. One is to make sure that we improve digital inclusion and literacy. We empower the folks who are the communities that are on our platform. And ultimately, I think if you look at things from a 50,000 feet point of view, we are really in the process of building future-ready workforces. Sorry. And if you look at the opportunities that are present for us in financial services in Southeast Asia, it's quite clear that there's a lot of headroom to go. 6 in 10 of the folks here in Southeast Asia are underbanked or unbanked. Even in a country as advanced as Singapore, one could look at statistics and see that there is less access than there should be. And even when there is access, the opacity of what is available actually makes things a little bit less accessible than they should be. Credit cards, 9 in 10 lack access to it. Why? Because for the normal financial institutions, the path with which you try to understand and know your customers are a bit different than if you had a super app that's actually able to be part of the everyday lives of the consumers. So we can actually recognize and know our customers a little bit better. So if you look at it overall and you just wrap it together, we are talking about being able to bring a mobile-only financial services business across Southeast Asia, be it payments, lending, insurance, or wealth management. There's so much potential for us to grow. And if we put it together within a super app strategy, we're able to then bring solutions that are specifically there to solve problems for the cash economy and simple enough to really roll out at scale. So as I've said before, accessibility, convenience, and transparency are the foundation for which we believe we can bring something that is different to the market. So I'd like to share with you a couple of stories of how financial services at Grab has actually made a difference for consumers, merchants, and drivers in the community. The first story here that I'm going to walk you through is about Jessica. This is Jessica. She's actually standing at her spice stall at a wet market in Malaysia. Because of the pandemic and the COVID movement restrictions, Jessica's income was heavily affected last year. So what do we do? What we did as Grab was we supported Jessica and thousands of other offline businesses like hers to really set up online operations to reach out to many more consumers than they have been able to do so by themselves. We knew we had to bring this on to our platform very rapidly. We brought on even folks like social sellers who are out there, as well as whole new groups of small businesses like Jessica, fishmongers, and others. These are really, really very traditional sectors that previously never went online. So when we approached them, these businesses, we found that they do require a lot of help, a lot of tools that were needed to bring their businesses online. And along with that also, of course, to be able to effect commerce effectively, digital payment infrastructure was also required that we brought to them. Very easily for folks like this, we were able to bring the GrabPay QR code to bear for her customers to be able to pay for her services very easily. The second story I'd like to walk you through is relating to our driver partners, who are many in Southeast Asia. Back in 2019, before the pandemic, we actually launched Southeast Asia's first micro insurance plan. This was for critical illness coverage. And the differentiation here is that the payments towards getting this critical illness coverage came from micro payments from each trip that the driver took. So driver partners were able to pay between 10 and 50 Singapore cents in premiums, and they were then able to accumulate coverage over time. We were very, very thankful to really hear an instance of this particular driver partner. He's in his early 40s. He's the sole breadwinner of his family, and he started going on this micro insurance for critical illness back in October 2019. In total, he paid $500 of premiums over 1,500 trips in the 5 months last year. And because of that, he was able to accumulate $200,000 in coverage for critical illness. Unfortunately for him, he was diagnosed with cancer soon after he had been able to accumulate this coverage. But thankfully, because he had that, he was able to actually receive the maximum payout back in May last year when he submitted the claim to be able to do so. This is something that a driver partner like this person, like this man, would have had to do a very difficult set of trade-offs between what he needed on a day-to-day basis for his family's cash flows, or would he choose to get critical illness coverage? In this case, he didn't have to choose either one. He paid for his critical illness over time according to his work schedule as he drove for Grab, and at the same time he was accumulating significant coverage for critical illness. I think this is a really important example of how, if you fractionalize financial services in the right spot at the right place, it can really make a difference for people's lives, especially here in Southeast Asia. So going from there, there are many other opportunities that we have to be able to provide these micro-size insurance and other financial products for our driver partners and also over time merchants also. Consumers are able to get right cover when you're traveling with us. Previously, before the pandemic, there was also travel insurance that you could get while you were going on your way to the airport. Driver partners, as I said earlier, we have critical illness pay per trip that was available to them, but also the normal e-hailing policies that's required in some countries. We also provide that to them. And all of this in a fractionalized fashion, so it's simple for them to get it and get the protection that they really need. If you look over in other aspects of commerce here in Southeast Asia, we've also been able to help and sustain small businesses as they are going through the pandemic. In Thailand, we were able to push what we call the merchant cash advance. This is back in January 2021. We launched it for our restaurant merchant partners in the country. Restaurants typically have cash flow issues, and given their fixed costs in terms of their rental, their labor, and so on, this really was made very difficult for them to support during the pandemic. And with the merchant cash advance, we were able to actually support them as they went through these difficulties. Specifically in Thailand, there's a restaurant called Khao Gang, and they were affected really badly by the movement control measures there also. And when they reopened their business, when they were allowed to do so by the authorities, they found that they didn't have enough capital to buy the ingredients for them to restart their business. But because the restaurant was a GrabFood merchant and we knew the viability and the vibrancy of his business, we were able to provide credit to them. I think these are the examples where, as we know our community members better, we're able to service them and bring them along and empower them. So ultimately, what we're talking about here is one of the biggest challenges we're hoping to solve is this financial inclusion gap that is in Southeast Asia. So over in Malaysia, I think we've been very supportive of government efforts. In this case, the e-Penjana program over in Malaysia, which was a stimulus program to disperse nearly $300 million in 2020. And with wallets like GrabPay wallet, we were part of the dispersal program to be able to really bring relief to the community very, very rapidly in the country. So overall, if you look at where we are going from here moving forward, especially with COVID, very fresh on our minds, and we're still living the realities of it every single day, it's really for us to focus on e-commerce, grow things that are really important for us, where our communities are, even when they are not using our Grab services. E-commerce is super important for us. We're looking to deepen our financial services. As many of you have probably seen in the press, in the last year, we've been able to get the full digital bank license here in Singapore. So as we build up the digibank over here in Singapore and hopefully across other countries in Southeast Asia, we are really going to be able to provide even more empowerment and more relief to the communities in Southeast Asia. And lastly, as a business, of course, we really do need to work on making what we provide much more efficient and much more sustainable. So in closing, I think really we are super excited about our mission to drive economic empowerment here in Southeast Asia, giving access to capital for small businesses so they can grow, providing them with payment options so that they can join the digital economy, ensuring the gig economy workers, as I walked through just now, so that they can protect their livelihoods while earning a living, breaking down payments into smaller sums so that it's just easier for people to digest it, understand it, and make it part of their everyday lives. So there's so much more that is to be done, and I have to say that we're just getting started. So thank you very much for your time this morning.
Wow, very inspiring stories and very interesting insights on the evolution of Grab Financial Services. Thank you, Mr. Chu. Let me now introduce our next speaker. Our next speaker is Mr. Jean-Marc Arbogast. Mr. Arbogast is the Philippine Country Manager of IFC. He also served as the advisor to IFC's Vice President for Corporate Strategy and Resources, where he helped formulate and articulate IFC's strategic priorities while aligning resources to deliver on IFC's agenda. Prior to that, Jean-Marc was a senior investment officer in IFC's Infrastructure and Natural Resources team, where he led the origination and execution of transactions in the sector globally. Before joining IFC in 2012, Jean-Marc worked as an investment banker at Bank of America Merrill Lynch in New York, advising industrial and agribusiness companies globally on mergers and acquisitions and capital markets transactions. He holds an MBA from Yale University and a master's degree in aeronautical engineering from ENSICA, a French engineering school. Let us now welcome Mr. Jean-Marc Arbogast.
Thank you, John, for the very nice introduction, going back all the way to my education, which makes me sound a lot younger than I actually am. A great pleasure to be here and great to see some familiar faces on the virtual screen. So I don't have slides, and I hope you don't mind it. Just like Philip, I'm a little bit rusty with running some of those slides, so I just prefer to talk about a few points, and I'll be fairly brief. And maybe I can start with a couple points on IFC for those who are not too familiar with who we are. And of course, let me say at the onset that I think towards the theme of this conference, the post-pandemic life, of course, will be very different than what we've experienced so far. And us at IFC, we've been very busy to try to figure out how we can best help and position the private sector to help in that crisis. So for those who are not familiar with IFC, we are the world's largest development institution focused solely on the private sector in developing countries. We were founded in 1956. We delivered over $300 billion of financing across developing worlds in over 100 countries. Here in the Philippines, to give you a sense also, our first project was in 1962. And since then, we have invested, I think it's close to over $5 billion actually so far. We at IFC, we invest in, of course, in sustainable private enterprises. We provide loans, equity, trade finance, advisory services, and a host of other products. What we aim to do is we aim to help companies to grow, to create jobs, access to capital markets, which is a very important aspect of our work. I think you'll all agree now that the private sector is needed more than ever to lift us out of the crisis in which we are. At IFC, we have globally essentially two pillars of our strategy, and maybe I can just touch on them very briefly. One of them is creating markets, in the private sector side, and opportunities, and the other one is to bring in more private capital into countries, and that's through mobilization of partners and other private money. We do work hand in hand with our sister organization, which I'm sure many of you are familiar, which is the World Bank. The World Bank, of course, is more focused on helping the public sector as opposed to IFC, which helps the private sector. Now, I want to just touch on three very important themes, which is essentially what's keeping us busy at IFC and specifically here also in the country, in the Philippines, and I can talk more about that later in the panel as well. The first one is leveraging digital transformation. So that's a very important theme for us. We all know that faster adoption of digital solution can expand access to finance, which is a very important theme of inclusion, and creating new economic opportunities for the people who are involved in that. It increases competition, which is also a very important aspect of what we're trying to do here. And for example, in the e-commerce side, you have some of those solutions, e-vendors are able to access markets both locally, national, but also globally. So definitely provides them a lot more avenues. And then on the health service also, which is another example where we're seeing a lot of digital transformation. To support that transformation, what is required, and many actions are actually required at scale, and that is investing in digital infrastructure, and which is one of the key things we're doing here as well in the Philippines, eliminating monopolies in the telecom sector, providing national IDs, and then creating and enabling a regulatory environment. We've seen a lot of good progress so far in our work in the Philippines together with our various partners. I can mention on the telecom towers, for example, we've seen the number of new permits for this year. I think it's standing at over 6,300 towers that are being planned to be built in this year. And that goes in addition to the existing stock, which is about 23,000. So you see a very steep increase, of close to 25. And that really demonstrates that I think it's moving in the right direction. And the same can be said on fixed broadband penetration in households, which also went up quite a bit in the country from last year. I think it was below 20 or roughly 20% and went over 37% in March earlier this year, which is the latest I have the number for. So that was the first theme, digital transformation. The second one I want to highlight, which also keeps us extremely busy, is making development greener and more sustainable. So here again, I note the progress that's been made in the Philippines with, for example, the moratorium on new coal-fired plants, which we've seen take effect, and also the efforts to decommission some of the existing ones and substitute them for cleaner sources of energy. So, and here, what we're trying to do at IFC is to help on that, what we call a just energy transition or a just transition, because of course, many workers of those plants would be affected. So it's important to provide all the support and the advisory that is needed. Then I guess I can continue on the power sector to mention that there are a lot of good solutions that we are trying to support in the country, and solar is one of them. And if we want to meet the energy needs of the country in the next 10 years, I think there are, not megawatts, but gigawatts, and I'm talking about tens of gigawatts of renewable energy that should be built in the country. And here again, we're talking about a massive investment, which the public sector, of course, is not able to do, and where the private sector, through our help, I think we can help or we can contribute to that in a very meaningful way. We also, are aiming for clean, of course, affordable energy, and that requires competition in the electricity generation and distribution, and as well as a strong regulator. So we're doing some work around those themes as well. Climate change efforts, that's both mitigation and adaptation. Of course, in the country, I think a lot will have to be done on the adaptation. The Philippines, relatively speaking, is not a large emitter of GHG gas, but it's really very heavily affected by climate change. So a lot of effort there that we're also trying to support. So that's the theme on greener and sustainability. I also want to talk about the last theme, which of course is now even more important than it ever was, which is investing in people or human capital. And the current COVID crisis shows us that having strong effective health systems is a key to prepare countries, for the shock we're just going through, but also for future shocks, because it's going to happen again. Hopefully not anytime soon, but it will happen again. Now we are busy also helping on vaccine access, and deployment is a priority. So on the logistical side, for example, but of course, I think we shall all not forget that it's not all about COVID vaccine. It's also about the other vaccines that protect us from other deadly illnesses that we should not forget in these times. So we're supporting and helping, or trying to help on the education and health systems, and that's not just providing budgetary resources. We at IFC, we think that the private sector has a real role to play, to provide better services in this space, and we need to find scalable solutions to enhance the healthcare system globally, but also here in the country, and improve the quality of education, which today in this remote world is so important. We're also working on closing the gender gap. In the Philippines, we've seen a lot of good progress, which is really great. And we've been working with some insurance companies, for example, to advance that field and creating specific gender tag products. And that's about it on those on the last team, which is investing in people, and on those three teams I wanted to mention. In the Philippines, with COVID-19, climate change, lots of inequality, I think the challenges are very big, but I think all together we can make a real difference. So thanks a lot, everyone, and look forward to the panel discussion.
Thank you very much, Mr. Arbogast. Indeed, the IFC's focus on technology, environment, and human capital is indeed very commendable and very timely. We look forward to having you and Mr. Chu later in the panel discussion. Okay, let me now introduce our third speaker. Our third speaker is Mr. Matthew Gamzer. Mr. Gamzer is the CEO of the SME Finance Forum. The SME Finance Forum is managed by the International Finance Corporation, the private sector arm of the World Bank Group, for the G20 countries, Global Partnership for Financial Inclusion. The SME Finance Forum includes over 200 banks, fintech companies, and development banks operating in over 190 countries as its members and industry partners, and serves as a key partner for the G20, APEC, OECD, and other multilateral institutions in small business financing. Dr. Gamzer has over 40 years experience in private enterprise and financial sector development. He has worked for IFC for 16 years in various positions from Washington, DC, and Hong Kong, where he has focused on SME finance and on financial sector development. Prior to that, he spent 25 years in management consulting and in senior leadership in an international NGO. He holds AB and AM degrees from Harvard University and a Master of Science and Doctor of Philosophy degrees from Sussex University in the UK, where his work focused on the management of technological change. Let us now welcome Mr. Matthew Gamzer.
Well, thank you very much, John. I think like Jean-Marc, my IFC colleague, I'm feeling I think I'm feeling a bit older than I want to feel because of that description. So look, folks, you're getting another IFC person, but I'm a little bit of an unusual IFC person because for the last half a dozen or more years, I've been an intrapreneur inside IFC, building the SME Finance Forum, which was, as you heard, was created by the G20 countries, and they asked IFC to make it into something. And I'm going to talk today, and it's a great pleasure to be reuniting. As you heard, I was in my last job, I was in the Hong Kong base serving Southeast Asia, East Asia, and the Pacific, and focusing on our IFC advisory services to both the real sector and the financial sector at the time. So it's great to be back. I know FINEX well. I know that you represent the big fish, but you know, big fish, what I'm going to do is I'm actually going to give you a step back from just about everything Philip was telling you about. to try to talk to you about why you big fish need to work with small businesses in the Philippines and make them more fit for the future. And how many of these examples that you've heard from Grab are not things that only Grab can do. They're things that all of us should be thinking about. So first, you heard that the SME Finance Forum has over 230 institutions in its network, including Grab, I should declare. You can see their logo somewhere in the center of the screen there. And unfortunately, I'm going to show some slides from some of our other members who are not Grab, but that's all right. And our members are learning from each other, linking to new business opportunities, and leading the industry voice in high-level dialogue with our parents, the G20, with APEC, with the Basel institutions and other important bodies. That's enough of my infomercial, except I do want to say that we have the Global SME Finance Forum coming up the 18th to the 21st of October. And we're focusing on greening SMEs. I'm going to talk about that in this presentation. A lot of people are talking about greening this year, but very few are talking about it at base of the pyramid level. And so if you want to know about that, ask the organizers how to get in touch with me. And anybody who's made their way to FINEX, I'm happy to get you a free pass to our meeting the 18th to the 21st of October. Now, let me talk about some of the things that Philip was very much telling you about and that many of you probably know already. I mean, look, this is what SMEs look like, whether it's in the Philippines or anywhere else. They are disorganized, they are heavy on cash, they are not heavy on advanced technology in general, and they're very informal as a whole in how they deal with everything, with their budgeting, with their customer management, with their management of their relationship to authorities. And this is the biggest problem of SMEs today and why they're not fit for the future. We need to make SMEs more like this, and apologies, Philip, this is another of our member Ant Financial slide from China, but this is a mom and pop shop in China, but it's not an unfit for the future shop. You can see that the customer is using a QR code to make payment. You'll probably find also that the enterprise is using electronic software provided by either Ant Financial, maybe another of our members, WeBank, or several of our other members from China, to help them learn how to digitally organize their lives. And the data is continuing to flow and make it possible to make more up-to-the-minute decisions. As you heard from Philip, even during COVID, there could be really up-to-the-minute, accurate, sensible decisions made about how to help SMEs through challenging times. So we need to change SMEs in this way. And they need to be more like this. Sorry for the German language. It's another one of our members from Poland's examples, actually. But this is how the SME should be looking at its business, not that budget with the glass jar and the dollars, right? And this is now, when I was running a small business in the United Kingdom before I joined IFC, I used to agonize over buying software to help me do things like this. And by the time I bought it and learned how to use it, it was obsolete. And I had to buy another. And so I would just give up. But today we have a wonderful software as a service that comes through the cloud. It automatically updates and you don't have to pay a lot of money up front. You pay subscriptions. And this is what's available to more and more SMEs. And this is what you as big businesses have to encourage SMEs and help them learn about this, because it's not that this does not exist in the Philippines. It's that they probably just don't know where to go. So, and I'm not suggesting you get them to use the German language. Please get them something in Tagalog or English or both. This is the other problem with SMEs. Their markets are very disorganized. Pretty colors, a lot of interesting people, very nicely diverse, men, women, different groups of people from different parts of the racial and ethnic groups in this particular country, but not very well organized. This unpredictability makes it not only hard for the SME, but it makes it hard for people that want to work with them, that want to sell to them, that want to buy from them, and that most importantly, that want to finance them. which of course is the focus of the SME Finance Program. We need more structures like this. This is an illustration of global supply chains for electronics, where there's more structure. But it doesn't have to be just a global supply chain for electronics. This should be true of supply chains, value chains, in domestic ones in the Philippines. We can be structuring markets more. We can be helping SMEs be part of more structured buying and selling chains, because again, that gives us predictability and data. And the one thing we have seen very clearly, and we hear this from all of our members around the world as we're surveying them during COVID, the SMEs that are part of these more structured buying and selling operations, and that's exactly what you heard Philip and Grab are creating, they tend to be doing better. It's both because it's easier to learn what's going on, and it's easier to learn how to assist them when you have this structured market information coming in. So here's another way to make SMEs fit for the future. Now, I've been very positive. Let me talk about some problems that are happening. I don't know to what extent these are happening in the Philippines, but you know, it wasn't that before COVID, we didn't have any ways to work on the infrastructure of the financial markets. IFC has been working on these with our World Bank colleagues for years. In particular, and I know we worked on this in the Philippines, on business registries, on credit information, and on movable assets regimes. And also we worked on alternative dispute resolution. Unfortunately, all of these have struggled due to COVID. There's a lot of these have depended too much on paper documentation and official wet signatures that are hand delivered. And so there have been delays. And in some cases, and I'm not speaking of the Philippines because I don't know your situation, there's been good intention and unintended bad consequences when governments have said things like, okay, we know it's COVID, so if somebody's late on their payments, don't report it to the credit bureau. This is not a good idea. It then pollutes the system because you suddenly took a system that was comprehensive, that you worked hard to create, and you're making it patchy. So you're making it unreliable. It's better to keep putting these things into the system and just explain why they're there. We now have algorithms that can learn from this stuff. What we don't want is to suddenly stop the flow that we worked hard to get into systems. But this is a big danger. And it's one of the things that could help our SMEs be less fit if their records become more patchy when we have worked hard to make them more structured. On the other hand, there's some good news. This is from Peru. This is a new system that just came in, and I think it's got application for many countries. They call it the Business Clearinghouse in Peru. It's a public-private partnership between all the legal and regulatory reforms the government provided and some digital reforms the fiscal authorities have undertaken, plus a private consortium that's put together an electronic platform that basically is recording all business-to-business transactions, but not only recording them, it's enabling know your customer to happen. It's enabling automatic compliance with sales or value-added tax, depending on whatever you have in your country. And it's accelerating payments, which is one of the #1 problems that some of the best SMEs have. They get these big customers and then they wait forever to get the payment from them, and that retards their development. Well, this system now exists in Peru. If you go to India, India Stack has now added on new systems to include this sort of transactions registry, and you can build all sorts of services on top of this, whether you're the buyer, the seller, the financier, whether you're an investor. The sky's going to be the limit. This just opened in Peru a month ago. We had a session on it in the SME Finance Forum's webinar series, but I think many countries need to think about this. And for example, it's accelerated payments, you know, from 1 day or 2 weeks to real time, to seconds, to getting your payment. And 2 weeks, unfortunately, was more typical for waiting for approved, you know, deliveries. Now, the final thing I want to talk about today is about how we can inject more sustainability in this structuring of SMEs' economic activities. And these are some IFC examples where we've worked with both the garment sector and the spices sector in Southeast Asia and in East Asia and in other parts of the world, on trying to link how well companies are doing as their small suppliers in improving their environmental performance and their social performance with getting access to faster payments and cheaper payments or cheaper financing. And you can, I think all of you know basically the 4 brands there. You've dealt with them before, they're in your country. What we found, and this goes back to my time in Southeast Asia, we would go to small businesses and say, we need to get you some audits so you can figure out what to do. And the entrepreneurs would say, get lost. I'm busy. I've got these deadlines to guys like Levi's, McCormick, Puma, and Nike. I can't deal with that right now. You know, if I don't meet the deadline, they're going to go to one of my competitors. Well, if you say, if you get an audit score over a certain level, you qualify for advanced financing, cheaper financing, greater financing, suddenly we're now having queues for taking this on. And we're having entrepreneurs look more in detail as to what they can do. And this is going to be really key, because while no single SME is a huge carbon emitter, no single SME is responsible for massive social injustice, but you add all of them together, just like you find that SMEs account for the bulk of employment, you find they account for the bulk of supply of essential goods and services, they account for the bulk of key innovations. Well, they also account for a good portion of our global environmental and social problems. So if we're not figuring out how to think small in this area and doing it through incentives, not through punishment, but through incentives for rewarding good behavior, the sky's going to be the limit. And I'm very pleased that IFC, and it wasn't my program, right? I'm very pleased that this was recognized and we've been getting awards, and we're going to get more awards for this program. But I'd love to see you in the Philippines get awards for this, which is why I'm sharing it with you. And as I said, you want to learn more about greening SME finance? Come see us at the Global SME Finance Forum, 18 to 21 October. You want a free ticket? You've taken the initiative to get here and listen to me. I'm happy to provide it. Just find out from the organizers how to find me. And with that, I'm very pleased to stop sharing my screen and to look forward to the panel.
Thank you very much, Mr. Gamzer. A lot of interesting ideas there on how we can promote and develop the SME sector. We do have a lot of businesses in this sector here in the Philippines, so indeed, coming up with focused solutions to support them will go a long way in growing the economy. All right, so we now have our last speaker for this morning, Mr. Anthony Marshall. Mr. Marshall is the Senior Research Director at the IBM Institute for Business Value. Anthony leads a global team of 60 technology and industry experts, statisticians, economists, and analysts, in addition to providing direction and oversight of as many as 100 thought leadership studies annually across all major technologies, industries, and C-suite functions. Anthony coordinates a global network of regional IBVs in China, India, Japan, Asia Pacific, Europe, Latin America, the Middle East, and Africa. Whew. Prior to joining the IBV, Anthony spent more than 10 years in strategy consulting, working extensively with leading global banks and insurers. Anthony began his career in Australia, working in public policy, specifically microeconomic reform, deregulation, and privatization of major utility industries and infrastructure. Let us now welcome Mr. Anthony Marshall.
John, thank you very much for that very kind introduction. And I have absolutely no confidence in my ability to move slides myself. So Alex, I'm going to thank you for doing this for me. And if you jump to the next slide, that would be great. Let me tell you just a little bit about what thought leadership is. So as John indicated, I lead the thought leadership, the business thought leadership capability of IBM. And thought leadership is really research, but with a very much a business focus. And given that I come from IBM, much of the work that we do is really the intersection between technology and business, particularly about how emerging technologies are going to impact business and helping clients and others. All of the content that we create is free to everyone. You can download anything that we create in real time. If you go to /IBV, then all of our content is there, and I'd encourage you to go there. Thought leadership is actually very important. Recently we've done some double-blind sampling of 500 C-suite executives, including 250 CEOs in North America. The average size of the organizations was about $30 billion in revenue. And we found that 58% of executives, 58% of CEOs as well, actually make business decisions based on thought leadership that they consume. And we actually found that almost 90% of executives or organizations that they represent have made a business decision in the last 3 months directly related to thought leadership in terms of decisions around technologies that they adopt or strategies that they pursue. Let's jump to the next slide. So I'm going to start by walking back a year and a half or so in February. And I was spending a lot of time in Asia Pacific in February and in Beijing and Singapore, Thailand, and Japan, and talking to clients. And it was really business as usual at the time. Jean-Marc talked about digital transformation. That was very important, but it was really almost incremental digital transformation. Business platforms, been talking about improving agility and resiliency. We've been talking about and improving customer experience. All of those things, the future was seen to be very stable. Let's jump to the next slide. We know what happened. Jump to the next slide. So, as everyone knows on this call, we saw massive contraction in global GDP, including in Philippines. We saw hundreds of thousands of jobs lost, including in Philippines. And we saw, very sadly, many, many hundreds of thousands of deaths. I live in the New York area. I'm actually in Houston this week, but New York was one of the first areas. I think my internet connection is a little bit unstable. Did you get there, Alex?
We can hear you, Anthony.
Hi, sir. We can hear you. You can continue.
Okay, good. Were you able to jump to the next slide, or is it me, or is it?
Okay, here's the next
great.
slide.
There we go. So as IBM's thought leadership capability, I was asked pretty much immediately. I got back into the US from Singapore to lead the thought leadership that we were doing and start focusing it directly on COVID. So we pursued triage. We needed to help our clients and others deal with the dramatic events that were happening and focused on principally 6 things. Business continuity. So given that we had a very remote workforce all along, our CIO worked with us on a piece of thought leadership about what business leaders can do immediately in order to try and build up the resiliency of their systems, and also get their employees working remotely, which is the third one here. Hardening supply chains. We know exactly what's happened there. We know what's going to be, the holidays that are coming up and the issues that people are going to have is just another symptom of really challenged supply chains. And so how do you deal with that? We focused on that. Cybersecurity. The risks around cybersecurity escalated enormously for business and individuals. So we needed to focus on that. Mental and physical health. Fortunately, a few months before the pandemic, we had co-hosted a mental health jam. A jam is sort of this way of people communicating with each other in live context, with an organization called Give an Hour, and that really focused on some thinking around mental health, also physical health. So the policies and procedures that IBM was putting in place, we shared publicly, we shared with our clients and others in order to help them leapfrog the processes that they needed to go through and to get a handle on this. And also loneliness and aging. We'd recently published a paper on loneliness, and we went back and updated that based upon what was happening in the environment. Let's jump to the next slide. All right, what did we see? Well, organizations needed to pivot fast, they needed to protect, they needed to rescale. We saw massive acceleration in digital acceleration. So the speed of digital transformation projects sped up dramatically over the past 12 months. We saw a dramatic decrease in the time to complete projects. Remote working, you can see the numbers here, decreased by almost 20%. Process automation decreased by 13%. Workforce resource management, security, workforce skills, everything decreased inside. The impediments, the imperatives increased, the impediments or barriers to transformation reduced, whatever those barriers were. People were making very fast funding decisions. Employees and organizations that may have resisted change previously were recognized the imperative to change. And so a lot of the barriers to change were sort of fell away, and we saw substantial budget increases in process automation, remote working. Part of it was triage, but part of it was more fundamental than that. Let's jump to the next slide. At the time, a lot of analysts were saying that the technology investment was going to fall, that the capital investment was going to fall. But we actually saw a massive increase in acceleration investment technologies due to the pandemic, globally 60%. We saw a massive increase in hybrid cloud technologies and IT spend. What we've been seeing is a maturing of cloud technologies. We've been seeing actually a decrease in the share of technology budget going to public cloud, a decrease in share. What we're seeing is an increase in the spend going to multi-cloud, which is multiple management orchestration of multiple public clouds, and also hybrid cloud, which is the intersection of public and private clouds. And so we're seeing a major increase in this. We're actually seeing an increase in Philippines in hybrid cloud, but still an increase in public cloud, which suggests that a lot of the point solutions and efficiencies are still achievable there. But the next generation is, how do you combine all this in a hybrid environment? We saw increases in budgets of artificial intelligence, machine learning. Why? Because depending upon what industry organizations were, they need to upscale, downscale, whatever. Call centers are having enormous difficulty keeping up in many industries. And so how do you deal with it? You can't get people are having to work off site. And so you need AI. So a lot of the AI investments that were delayed and organizations not really wanting to deal with AI, suddenly AI became really, really important in order to manage that change. Jump to the next slide. As I mentioned, a lot of people said, capital expenditure is going to fall. We said, no, capital expenditure is going to rise. And it did. So we published a paper sort of in the third quarter of last year, which basically said that. Let's jump to the next slide. All right. So what's been happening in this acceleration? What are the transformational investments about? Well, they're all about interconnectivity, as you would imagine, where organizations are operating in more remote ways. But they're also about agility, as you might also imagine. We've seen major changes in the way organizations go to market, the vaccine development, and the enforced, almost open innovation that necessitated. You had diversification of organizations, like Ford going into ventilators and Nike going into PPE. You saw agile organizations outperforming other organizations dramatically through COVID. So agile organizations had a 60% better revenue performance in the pandemic than their peers. And you saw, as I mentioned, a major increase, double-digit growth in hybrid technologies in order to get that transformation happening. So hybrid technologies are all about putting technologies in place that enable interoperability and intersectionality between parts of the organization, which is the nature of transformation. How do you get parts of the organization connected rather than siloed? And that interconnectivity allows you the agility, but also how do you get them connected to the outside environment through ecosystems? Let's jump to the next slide. And hybrid cloud allows you to do that very effectively. We saw the value of transformation increasing dramatically. And here's a quantification in some research that we recently came out with about 3 weeks ago. And this is on expenditure on cloud technology. So we know that cloud technology improves efficiency, but cloud technology also can increase revenue, right? So this is a study of incremental revenue growth. So change in revenue growth associated with investments in cloud technology. And what this is saying is that the value of investments in cloud increase dramatically if you combine that investment with different aspects of transformation. And so if you combine cloud with enhanced data capabilities, because fundamentally cloud is about data, you grow, if you think of this 13 times, so the value that you can get, the incremental revenue value that you can get from a dollar's cloud investment is 13 times greater if you go through the full spectrum of transformation. How does that 13 times break up? Well, if you think of it as 100%, these are the breakdown of that 100%. So 11% is about data capabilities. You've got, if you combine cloud with other exponential technologies like AI, like Internet of Things, it's another 17%. If you combine it with transformation of skills, processes, and security, there's another 35%. And very importantly, if you combine it with culture, open innovation ecosystems and platforms, there's another 29%, 30%. And so by combining technology investments rather than having point solutions of I'm going to invest in this particular technology for this particular thing, if you think about it programmatically and strategically, the value that you can get from the investment is magnified dramatically. And this data shows that. This was a global survey, including Philippines. We surveyed more than 7,000 executives, 7,000 organizations. So this is very deep analysis in order to get to these numbers. Let's jump to the next slide. 13 times is what we got, but it was different across different industries. In banking, it was 20 times. In electronics, it was 25. Retail, less, 7 times. And so you get this diversity of numbers that aggregated up to and averaged out to the 13 times. Let's jump to the next slide. All right. So we saw, as I mentioned, increasingly important open innovation. So organizations innovating in open ways. When I first started consulting with IBM, I focused on innovation. I was working with a lot of banks at the time, but also companies in other industries. And they were wanting to improve the way that they innovated. Even very innovative companies, innovative banks wanted to extend innovation more effectively through their organization. But innovation tended to be closed. But it's not closed anymore. It's all about openness. And we're seeing the importance of open innovation increasing dramatically. You can see here, 2019 versus 2021 versus 2023. We are seeing dramatic increases in the focus, importance of open innovation in the strategies of organization. That is innovating through and within, across, without the ecosystem of partners in the way that organizations innovate. And that's again enabled by hybrid technologies that promote interoperability and communication, collaboration. Let's jump to the next slide. All right, as I mentioned, open innovation is all about interconnectivity and ecosystems, and this is just some data on that. So we've been seeing a 2 times increase in platform business models, 4 times in business ecosystems, and extensive partnering both within and outside industries. A lot of movement across industries, a lot of collaboration through ecosystems now, where organizations are getting the benefits of specialists in other industries in order to create very compelling cross-industry value propositions, which is exactly what Grab is doing in the space that they're working in. Let's jump to the next slide. All right, what are we seeing in Philippines? Here's some Philippines data. Next slide. All right, so Philippine executives believe exponential technologies like cloud and AI are delivering growth. So this is a question we ask: which of the following technologies most help deliver results, the results that you need over the next 2 years? IoT came first, cloud came second, across the various dimensions of cloud, public cloud, private cloud, hybrid cloud, AI, big, RPA, robotic process automation, analytics, and biometrics as well. Let's jump to the next slide, sorry. All right, adoption of key, so Philippine Philippine organizations are adopting or piloting exponential technology. So this is adoption of key technologies by organizations in Philippines versus global. Cloud, very interestingly, 97%. These are large organizations. We survey large organizations. We probably get down to about 5 billion in revenue. in terms of the survey work that we do. But you're looking very, enormous consistency between the global organizations, global executives and Philippine executives that we've surveyed. IoT, a little bit less in Philippines, but only by a couple of points. RPA is high, and AI, interestingly, is very high in Philippines as well. Let's jump to the next slide. And this is piloting or adopting, so it could be piloting. So what do you need to do? What are the key takeaways? Well, as I mentioned, it's not about technology point solutions anymore. It's about integration. It's about a holistic approach to technology. And so hybrid multi-cloud architecture is essential to enable that interoperability that allows agility, that promotes open innovation, which are the key ingredients for success. Hybrid ways of working we're very familiar with now. Systems modernization. If you've got established systems, and in the past, even as recently as 10 years ago, it was enormously costly to put in place bespoke technology solutions around systems modernization. Now it's much easier and cheaper and better with hybrid cloud, hybrid technologies, and that promotes the technology renewal. That's important, and of course, critically important, as I mentioned earlier, the barriers to innovation, the barriers to transformation did fall during the COVID. We don't know at this point whether they're going to rise dramatically, but what we do know is that cultural change remains critical, skills remains critical, and talent with the, certainly in the very tight labor markets that we're seeing, and of course, reiterating once again, open innovation. Next slide. All right, as I mentioned, if you're interested in any of the work that we do, we're publishing things every week. We're coming out with a Chief Information Officer study next Tuesday, followed by a Chief Technology Officer study about 3 weeks after that. We're finalizing a Chief Finance Officer study. We're coming out with a new Chief Executive Officer study in January, which is all about sustainability and a whole bunch of stuff in between. So just go to ibm.com/IBV if you're interested, and it's all there, absolutely free, and hopefully it will be helpful to you. Looking forward to the panel discussion.
Thank you very much, Mr. Marshall. It is quite interesting that the pandemic has become a catalyst in technology investment. Indeed, the need to be strategic about IT investment and linking this to business transformation is particularly important to capture value. And it was refreshing to know also that Philippine organizations are toe-to-toe globally in piloting new technology. So anyway, thank you to our 4 speakers this morning. Your collective knowledge and insights really enlightened our attendees. We will now be moving on to our open forum. So similar to our earlier webinars, should our attendees have any questions to any of our 4 panelists, please feel free to type your questions in the Q&A box. And please indicate to whom you are directing your questions to. All right, to facilitate the open forum, may I also introduce Ms. Maria Victoria Españo. Ms. Marivic is the Chairperson and Chief Executive Officer of P&A Grant Thornton. Marivic is a Philippine Certified Public Accountant, a Certified Management Accountant, Australia, Associate Certified Coach of the International Coach Federation, and a Fellow of the Institute of Corporate Directors. She is recognized by the Philippine Professional Regulation Commission as the 2020 Outstanding Professional in the field of accountancy. In addition to her role at P&A Grant Thornton, Marivic is a board governor of the Management Association of the Philippines for 2020 to 2021. She's also the trustee of the Shareholders Association of the Philippines for 2019 to 2022, and a fellow and trustee of the Institute of Corporate Directors. Previously, Marivic was the 2018 president of the Financial Executives Institute of the Philippines. From 2018 to 2019, she also served as chairperson of the Metro Manila Regional Council of the Philippine Institute of Certified Public Accountants. From 2015 to 2019, Marivic was a member of the Board of Governors of Grant Thornton International Limited. She has completed her master's degree in accountancy at the Polytechnic University of the Philippines and had attended various executive programs at the Asian Institute of Management, Wharton Business School of the University of Pennsylvania, and SED School of Business in Oxford University. Ms. Españo, the floor is yours.
Thank you so much, John. Just like the other speakers, you've also made me feel older today. Well, good morning. Good morning to everyone and to all our FINEX members and the guests who have joined us in this morning sessions. You know, although we are just on our third day, I must say that it feels that we have learned a lot. And I look forward to the coming days. I've enjoyed the sessions that we've had so far since Monday. And really the insights, the presentations of all our speakers have been quite very well. So my congratulations to the 2021 FINEX board led by our president, Attorney Francis Lim, and the chair of this year's conference, Brian Edang and Joseph Albert Gamboa, and the members of the committee. Now today, as the number of COVID cases in the Philippines start to go down, primarily due to the improved level of vaccinated people, we are witnessing the fairly early signs of us exiting the fog of COVID-19, if I may use that term. In the past weeks that I've been going to our office in Makati and Quezon City, I have seen a higher level of economic activities and I've noticed a certain energy showing how eager our people are, how eager they are to go back to their normal routines. And we do all hope that things, would really be positive moving forward and the fog will clear up. Okay, so some organizations are talking about, planning to return to work, and there are more and more signs of hope and optimism. It is important, though, I believe, that we do not miss the opportunity of this moment, a once in a lifetime opportunity to reflect, to integrate, and probably reinvent ourselves, our businesses, so that we can provide a more human experience to our employees and other stakeholders and create businesses that will lead to a better future for the next generation. Hence, through this session, I hope that we can take a moment to reflect and talk about what we have learned for the past 2 years and how we see these learnings guiding us to the path moving forward. Our speakers earlier presented really very interesting points, and I must say, I was shifting from SMEs to financial inclusion to new business models, and finally to technology. These are all factors that we've been discussing in the past, and I would like to see, based on what we've experienced in the past 2 years, whether those experiences would help us move better on these particular issues. I would encourage you, our audiences, our FINEX member, to join us in the conversation, as mentioned by John, by typing in your questions in the Q&A box. Comments or insights would also be welcome. So moving on, gentlemen, I hope you won't mind if I use your first names as I address the questions to you. Maybe we can start off with this very simple question, and I'd like to address it to Jean. It has always been said that the world as we know it will no longer be there as we emerge from this pandemic, that it will change, right? But as I mentioned earlier, the themes on financial inclusion, technology adoption, empowering the entrepreneurs have been themes that we've been discussing even before the pandemic. So we're seeing some changes, but do you see these changes to be permanent? We've seen people going online using digital products. Is this just a temporary behavior and people will go back to the way we have been behaving pre-pandemic? Or do you believe that there's no turning back at this point? John?
Thank you, Marivic. Very interesting question. Let me first maybe begin by saying, when we entered the crisis in the early 2020, I don't think anyone would have imagined it lasted so long. So now we're in a situation where it's more like a marathon rather than a sprint, right? But the problem is we entered that race like a sprinter almost, because we didn't know how long it would be. So I don't know if you've tried to run a marathon, but if you start a marathon and you start running at the speed of a sprinter, usually you don't go very far. So that's been a real challenge for all of us here, and frankly, the other challenge is we don't know how long that race will actually be or how long it will last. I mean, there is light at the end of the tunnel, but who knows? It might still be several months, hopefully not years, but nobody really has the answer. So we need to prepare for and adapt to the situation. I think we've seen a lot of changes very early on at the beginning, and there what we've seen, especially in countries which still had some fiscal space, where the government still had some fiscal space, is basically the public sector sort of taking over a lot of what the private sector was doing, right? And so that's been a change where it's good because that was helpful to weather the crisis at the onset. But as we move forward, I think it's important that some of those changes, right? I mean, we take this as an opportunity to make it to fix it, right? To fix certain markets. So and also the other thing I want to mention is, as anyone, I think the human nature, we're a creature of habits. So first few months you change. I think it's very easy to go back to where you were before. But after a year and a half, we start to get used to certain things, including the work environment we are in today, and the way we interact with our clients, with our companies, and so I think a lot of that will stay and will even get better, as we move forward. And there is a clear opportunity. I think we've heard it from my the other speakers this morning. A real opportunity to do things a bit differently and to reshape certain things, certain business models. The digital transformation is. I think in a year and a half we've seen progress that probably we would have taken many years to make, if we were, in a pre-COVID situation. So I think there's a lot of good things, of course, coming out of it. But we need to make sure that those changes that stay are the good ones. Basically, that's what I want to say.
Okay, thank you, John. Anyone who would like to contribute on that question? Maybe Anthony. You mentioned about the spike in capital expenditures. I think for some businesses, it was important. There was no choice. Maybe they needed to be agile to react to this situation. But as we go back to the normal, assuming the virus has been, a solution, a medicine has been invented to address that, do you see companies slowing down and probably saying that, okay, there's no urgency anymore to do this transformation that we were doing earlier?
So I think the pandemic put a spotlight on trends that were already in the works, and really highlighted them. So a lot of the controversy about social right now, that would have happened anyway. The virtualization that's happened and the recognition of that would have happened anyway, but it would have taken, as Jean-Marc said, several, up to a decade, and it all happened within a year. In industries, you saw the digitization of things like healthcare industry that have been very analog, and you've seen a real the force of technology being forced upon organizations, and what we're seeing in our data is that is absolutely not going to stop. Executives business leaders and in government leaders, we serve a government as well, are really seeing that the necessity is for change. I think and people have said this many times in the past, and we shouldn't have believed them. But I think what's happening now is almost like a perfect storm of this dramatic change. But also you've got these technologies. So I've been consulting one way or another for 25 years. Yeah. And right from the late 90s, we were promising people, we get omni-channel, merging those, online, offline. It didn't work. The stuff wasn't there. It was so expensive, right, and difficult. And if you had an organization like a bank, it was enormously risky, and you weren't willing to make big capital investments because if it destabilized these very anachronistic systems you've got in place, you're done, right? But the technology maturity is here. So, hybrid cloud is more than just another variation of cloud. It is really the interconnecting fiber that makes it incredibly, nothing's easy, but compared to what was, incredibly easy to interconnect all the various elements within an organization and then operate outside of an organization. So then you've got the other layer, the people layer of orchestration and skills, because the technology can do it now. So you need the other area of people skills and governance to allow you to do that. I think executives recognize this and will continue pushing this very quickly. You've got 5G and other technologies that are about to hit, which is not just an extrapolation of 4G. It will force different ways of thinking about how you do work. And so I think we're at the very beginning of something even more dramatic. It's almost like an exponential on top of an exponential.
Okay, thank you, Anthony. Philip, you're smiling.
Yeah.
Would you like to share your thoughts to us?
Sure. I totally agree what Jean and Anthony have just shared, but let me add a little bit of my simplistic way of looking at it also. I think if you take a step back and you look at what has happened with COVID, it is the first time in our lifetimes there has been a unifying experience through the whole world, a signaling theory. So I like to think of things simply. When billions of people together go through a common experience and they are all stopped in their tracks, businesses, people, governments, they're all stopped in their tracks. They've had a common enemy that they're looking at, and they've had to look at things on how they adapt their communities and their lives forward. Guess what has happened? Everyone throughout the world, 6 over billion people have been asked to reevaluate their priorities going forward. And when you have that kind of situation versus a normal business environment, so if you're a business, normal business environment, some businesses are aggressive, some are not aggressive. If you try to invest and your competitors are not doing so, you carry a heavier burden, outcome may not be as promised. So you're somewhat reluctant in pushing forward. But if everyone is at the starting line at the same time, and you feel that everyone is going to be putting their best foot forward to reimagine what the future could be like, they look at all the tools that are available, whether it's in tech, whether it is in societal change, and they say, I'm going to run right now. And if I'm going to run, I better run super fast. And I think this is where the buildup of optimism is coming from. It's this shared common experience that is searing so much of what it means to be us as a common human race, health-wise, technology-wise, how we relate to one another. I've had many conversations with friends across the world, and it's amazing how we come from the same spot now versus, well, it's a little bit different in Ghana versus here. Well, it's a little bit different in Colorado versus here. It's like, guess what? We're all trapped inside right now and reevaluating. So I think this common starting point is really pushing us into, vaulting us into deeper into the 21st century than we have ever imagined just 2 years ago.
Yeah, thank you, Philip. To the point of Anthony, these technologies have been there before. And when I was listening to Matthew earlier, he was saying, the SMEs have these challenges, low capital, low use of technology, informal processes, but the technology has been there, right? So and I actually look at some of the partner or member organizations that you have in your website, Matthew, and I'm quite amazed with the the facilities that they're offering to SMEs. Where are SMEs right now? Did this experience also trigger them to address those challenges of technology, informal processes? How are they coping, Matthew?
That's a great question. I would I would say that the technologies in principle have always been there, but they've not been very friendly at the smaller scale in many cases. And I think Anthony gave a great example. You take things like software. You used to have to buy software, and it cost a lot up front. And if you made the wrong choice, or if you couldn't understand it very well, you'd be messed up. And so for SMEs, but now you get something through the cloud. You don't pay a lot up front. You take a subscription, and if the maker of the software improves it, you get the improvement real time because you're a cloud subscriber. You're not stuck with version whatever of, I don't want to name any companies that I've spent a lot of money that I cursed myself about because I couldn't, by the time I figured out the software, it was too late. But I do think that SMEs, you also heard from Anthony that people said my IT plans for 5 years are now my IT plans for 5 minutes from now. And that's occurred in SMEs too. But to some extent, some SMEs are able to deal with that better than others. And we see different responses in different countries. I mean, in some countries, we're finding that the smaller the SME, the less capital intensity they have, the more they've been resilient and able to adjust. And in some, it's been the opposite. We've seen those really small ones just suffer because they didn't have enough capital and they couldn't survive. And then the bigger, slightly more stable ones did better. And then of course, sector, we've had very, very different experiences. If you've been in logistics or health products or things, you're doing very well right now. If on the other hand, you're in tourism, a big industry in the Philippines, you're hurting, and you're going to be hurting for quite some time. And because you can't survive on the domestic market alone. I mean, my son lives in Hong Kong and he works in the hospitality industry. So I'm acutely conscious that there are sectors that no matter how great their products are, they're going to have a while before things are going to get better. And so governments have to really think hard about how to handle this, because that's the solution is not, oh, well, just let them all go under, because you don't want to do that to the tourism sector in the Philippines. You don't want to do that to to some of the other critical footfall dependent, foreigner dependent things. So the challenge is how do we move onward from here? And I do hope, I mean, I'm optimistic overall. I think this has been a wake-up call for the world. But we've got to be careful. And I hope that Asia, which is less wedded to some of the Western core infrastructure that we've based a lot of the way things work to date on, is going to lead us into different solutions. And let me just give two that affect SMEs. When you're moving money across borders, even before COVID, it was a mess. Why? Because you're using telex technology. That's from the 1920s. That's how SWIFT works. So, I'm sorry. And we've learned what happened. It was very good for one Philippines casino that SWIFT works so inefficiently, but it's not good for the bulk of the businesses of the world. But you think that's bad? Trade finance still is following procedures from 14th century Venice, maybe minus the sealing wax. And I say maybe because in some countries, like in you need a chop, which is the equivalent of sealing wax. And big companies find ways to work around this. They can make bilateral negotiations and avoid systems. Small businesses are stuck with it. So this is our opportunity. We could now seize on the technical possibilities to move beyond these systems, but we got to make sure that some of the big companies that have done very well on building them up to this stage, that we gently pressure them to be part of the change and not be part of the anchor that's holding us back. Very good for IFC's trade finance program. I've been involved with that for many years. We've made billions of dollars being able to give guarantees and things on trade because the system doesn't work very well. But we don't want to be in this business forever. We want to be in the next stage. And we would much rather work in the long run to bring the new systems in that use distributed ledger technology, whether they're using Anthony's Hyperledger from IBM or any of these other ones. We want to be part of the new infrastructure of the 21st century, not bringing the past centuries into post-COVID.
Matthew, you were very passionate earlier when you said that big fish, big businesses like working with big businesses, right? And your hope is that SMEs can be integrated into the supply chain of big businesses. I think one of the things or one of the lessons that we've seen in this pandemic is that companies have realized the vulnerability that they have when concentrating their materials, their requirements on a few suppliers. In your view, how could we move forward and get big businesses to open opportunities for the SMEs?
I think there's a great opportunity for development banks and not just IFC to work with big business to change the perspective, because I think that big business is now more and more wanting and exposed to smaller businesses, but they're still doing it with a relatively short-term perspective. And that's because, look, there are a lot of pressures. If I'm running a publicly traded company, I have to make those earnings reports every quarter. But if I get some help, if I get some partnership, maybe I can, instead of just saying, many big businesses that I've worked with in IFC, when we've talked about things like greening the supply chain or improving labor practices, they've said, that's fine, as long as it's cost neutral for me. I'm going to continue to have my price point. I'm going to continue to need the delivery in this amount of time. But you just work with the small business IFC, because we're not going to pay for it. That is not an acceptable long-term approach. But also, we need to help you, right? We need to provide longer-term support and risk mitigation and things like that, so that we can encourage more joint thinking in the longer term to take us into better ways of doing things. And I think that, I showed some examples of where I think we've achieved that. I'm not talking about stuff that's impossible. I gave a lot of worked examples, some of which we nicely won awards for. But there's so much more potential to do that, both in global supply chains and even in domestic supply chains.
Thank you, Matthew. I share your aspiration that we can build a better ecosystem for small businesses, for SMEs, to also become integrated into the supply chain. Philip, let me just ask you. Before, when we were pre-pandemic, we saw the rise of the sharing economy, right? The rider sharing, Airbnb, workspace, and all. And there are several factors in one study that I read. There are several factors that they are looking at. The users are looking at when availing of these services: economic, the cost, environmental, social, as well as technology. Now, COVID came in, and the health and safety concern of consumers would play a big factor whether you would continue to avail of these services. In the past, when I have to go to the office, I don't take my car, I just do the Grab. But nowadays, I would hesitate. Would this experience that we have shift customer behavior? Are you seeing changes or adjustments in the consumer or in the rider partners of Grab, for instance, to address these issues?
Sure, and for sure we are seeing changes, and I think the important thing to figure out is, going forward, what will remain, what won't. Like what we spoke about earlier in the last 5 minutes to 10 minutes about the underlying trends were already there, underlying issues and advances were already there. So over here, I think the dimension when it comes to health and safety was always there in the selection criteria for wanting to participate in a sharing economy, except it's just not as emphasized previously. I think with COVID, it has really educated us a little bit more than we wanted to. So as a person who used to travel in Taiwan, I've always been a bit puzzled sometimes when I see people wearing masks before pandemic in Taiwan. And I would sometimes ask my friends in Taiwan, why are they wearing masks? They said, well, they have the flu and they want to be considerate of the population. And it's normal, common practice to wear it, to protect others, to wear the mask on it. And so I always thought that was a Taiwanese thing until COVID happened. And then it became quite a normal practice, right? And of course, in America, it became a political statement, but that's another conversation. But I think this is what I believe is happening for us in our business. We've adapted quite quickly on how we can be supportive of the driver partners so that they continue participating. We change procedures within our transport business on how passengers will interact with the drivers in there. So we adapted to what we could see that was reasonable for this health and safety of our consumers and our driver partners in our ecosystems. And so the question is what will stay and what will shift. I think a few things would stay for quite some time, and we believe that that's going to be quite durable. Well, one of them is that we've been able to see that for food deliveries, for instance, even in places where movement control has been relaxed, those trends remain quite high. That we see that in the data. So in terms of habit formation, I think it's been a little bit more secure over there. In terms of digital payments, it has actually shifted quite significantly to the order of 40–50% in some of our measures of cashless payments compared to pre and post pandemic. And we believe that's going to be sustaining going forward. And in other ways also, people have gotten used to consuming some of their services that in the past, they had to go physically to it. Now they're doing it virtually. So, as an example, and that's something that we are not in yet. We're in the process of building up digital banking. But if you look at banking expectations of consumers, people have had to live in a world where they don't go to branches to be able to do their banking, and people have had the wonderful experiences of digital banking. So I think those would be mixed into how people live their lives going forward. So I think it's going to be a mix. And in many ways, these are trends that, like Anthony had described, that's already there. It's just been accelerated. So I think more of what we had expected in the 21st century is getting pulled to the now. And I think we're just converging a little bit faster.
Yeah, you made a good point about some customer behavior changing because of the experience, like adopting digital services and digital products. And when I was reading about Grab Invest, I was thinking that these are usually the products that one would go to one's bank or a fintech company, but not probably Grab, right? So in your assessment, because of the experience that we've had, has the process of consumer adoption for these products that you're now going into been hastened? Is the market now ready in terms of, I guess, familiarity with the products, adaptability to the technology? Has the stage been set for you?
Well, I certainly believe so. But I think if you look at data, there are certain trends that are quite clear, right? The comfort level that people have with technology is tremendously even higher now than they were even 2 years ago. People's awareness of the idea that cloud is important because, for instance, as we've all experienced globally, even services like Facebook have DNS outages. And so in common parlance, in common everyday people's experiences, technology has actually become front and center to what they have. So I think that has helped in terms of familiarity and comfort with doing it. So the idea that technology is part of your life, it's not something that other people do. I think that the second thing is the exposure that people have. I think in the last year, especially when it comes to investments, more people have had time spending more of their waking hours looking at things that are more related to finance. And if you look over whether it is if you look at across countries in Southeast Asia or in the United States, a lot more people are looking at investment platforms, for instance, and even things related to crypto also, and things related to that side of the burgeoning economy. People are participating more. I think with that participation, it is an opportunity for companies like us in Grab to really look at, okay, if that's where communities are putting their attention, where they're going towards, and they are in effect wanting to be more involved and more included in these different types of aspects of the economy, I think that's inevitably where Grab has to go. Because when you ask how we decided to go into Grab Invest, for instance, we really looked at the pain points that passengers and drivers had. So when it came to driver partners, if you have your income coming in from your jobs that you are fulfilling, you have cash flows coming in. What do you do with those cash flows? Of course, they get them into the wallet, they deposit into the bank, but then there are other things they could do with it, for instance. So providing a low-cost investment products for them is very much in the spirit of how we look at things in Grab. So I think with the rising awareness, more exposure, and people congregating towards this part of the economy, I think it's inevitable that we have to start pushing further into it.
Thank you, Philip. Allow me to take some questions coming from our panelists also about SMEs. Matthew, SMEs. Okay, let me read the question. Could you hold on? Okay, so for SMEs, would you recommend that they take the ones being offered by, say, Amazon or Microsoft, in terms, I guess, of the technology that they can avail?
Okay, this is a great question. I was just listening to Philip and thinking, the real burning question of our time is whether the paradigm of I get my finance from a financial institution and I get my other stuff from another type of institution, and I get whether this paradigm is breaking down. 2 years ago at the Global SME Finance Forum, the last time we had one in Amsterdam in 2019, our theme was convergence, which was about this very question. Because it may be that the future is that if you're a driver, you're going to get everything from Grab. You're not going to deal with, you may have a bank in the picture underneath, but you're not going to know it because you're just going to be dealing with Grab or Amazon or Facebook or Alibaba, or, I want to try to be equal here, or Flipkart, or, or Jumia in Africa, or Mercado Libre in Latin America. But this is still an open question because that's not how we run policy right now. Mm-hmm. Regulators are based on types of institutions, and they're not very comfortable with what's going on right now. Now, whether they should be more comfortable or not, they're not comfortable right now. So we have to watch the regulatory response. We're already seeing, and I don't want to get myself in or IFC in trouble here, and I'm not speaking for IFC, but we already see in China what's happening with governments that are really trying to figure out how to handle this, and whether they're doing the right thing or not, I don't know. They've been very clever so far about how they've handled the evolution of the digital space for China. So I don't want to jump to any conclusions, but clearly they're uncomfortable with the complete platformification of life and 3 companies dominating everything. And maybe they're right to be that way. So for SMEs, are you better off? You could be, but you could also be. We have a lot of stories in the US with SMEs that are unhappy with Amazon. Why? Because they suddenly have to use them for everything. And then they find that Amazon's learned about their business and they've set someone else up in competition with them. Now, clearly that's not what we want to see. And please, I'm going to get in trouble with Jeff Bezos now too, but so with concentration comes risks. And that's why we have, competition policies and things like that. But also with competition come economies of scale and advantages. And the big challenge for SMEs is, to what extent should they be going to the super platforms, the super apps, and to what extent should they be still trying to hedge their bets? And the trouble is, as SMEs, they may not have a choice. So that's where the big business community, the governments, we all have to try to figure out how to work on this. It's really an interesting development. It has exciting new potential, as you've just heard, for all these things Grab can do that, there was never a package that was suited to these drivers or suited to restaurants that were doing carry out or suited. Now they're getting customized stuff like corporations only used to get from financiers. This is wonderful, as long as it's not taken too far, right? I mean, I'm in the US and I'm listening to the news about what Facebook is doing to young girls and what Facebook is doing to accelerate divisions in politics and things like that. I mean, there are big congressional hearings going on down the street here. So we got to be careful. With potential comes new risks and new challenges. And I think we need to work together, the private sector and governments, to figure out a good way through. If we do keep talking, I think I'm feeling more comfortable we'll find the right way. Because on balance, the potential is higher than the risk.
Thank you, Matt.
Can I just build for a moment on what Matthew was saying, because in terms of the intersectionality between SME and large businesses, IBM's done a couple of projects with organizations like Maersk, for example, in very analog business, right, of transportation, freight forward, all the rest of it. And Maersk created a platform called TradeLens that enabled smaller organizations that were unable to capitalize an environment and an ecosystem where they weren't going to come in unless they had incentives to do so. And so the conditions, the ability to exchange and engage digitally was enormously beneficial. Also in another industry like industrial products, in Mexico with Cemex, exactly the same thing, where small producers that were just unable to digitize very effectively, given the costs involved, in a very analog industry, were able to do so. And that's happening more and more. And that's where large organizations are really taking the initiative to enable to build platforms that becomes a virtuous cycle for everyone in the industry. And that's about the expansion of ecosystems, and it's going to turn into cross-industry ecosystems ultimately, and that's going to drive even greater benefits across the board.
Yeah, I think that's a very interesting point, Anthony. As we have SMEs trying to embrace technology, the challenge is really the capital needed to build their own infrastructure. But what you're saying is it doesn't have to work that way. There are platforms where they can get into the ecosystem and use the existing technology that can be made available. Now, in relation to that point, there is a comment or a question here exactly for you, Anthony. IBM, it reads, IBM compared to other technology companies like Amazon, Google, Microsoft, has not cared to SMEs. And this has been a challenge to IBM. What is it doing? What is IBM doing to address the competition?
So I'm a researcher. I can't speak on behalf of IBM. However, what I will say is that part of the strategy that IBM's really embraced in the last 12 months, given the embrace of hybrid cloud and hybrid technologies, is recommitting to business ecosystems, and is really making enormous efforts to expand the ecosystem with organizations from startups right through to large organizations, because there's a renewed focus on this interoperability, and everyone that has something to offer, everyone that has something valuable, whether it's data or technology or skills or capabilities, has a role to play in those ecosystems. And so whether it is in the hybrid cloud space or in the quantum computing space with the Q network, where individuals can come and play on a quantum computer and learn about modeling there, that's all about building ecosystems. So, and that's both SME and individuals that are able to do that costlessly. And that is certainly the wave of the future.
Thank you, Anthony. Now let me go back to Jean. John, you were talking about sustainability earlier, about the green bonds that have been launched in the Philippines. And as we know, these bonds are intended to support specific climate-related or environmental projects. I've seen in some literature that in some countries they're looking at social bonds as a possible financing solution to address COVID-19 pandemic impact. Can you give us some examples? What are the countries that are maybe doing this already or considering this, not necessarily related to COVID-19?
Yeah, no, thanks, Marivik. So in terms of countries, look, I don't necessarily, it's been done, of course, very heavily. And I was just reading, I think, like in Africa over the summer, I think Benin was one that just raised a very large amount of money through a social bond. I think other countries in Africa are trying to follow. So it's definitely something that's been done at the country level. And there, at IFC, we're not really involved in that process because it's dealing with a sovereign entity. That said, I can talk a little bit maybe about the social bonds that we at IFC support, which is more related to the private sector.
Uh-huh.
And actually also on our own balance sheet, I want to say that I think starting in, when was it, 2016 or 17, we started that program, and we have ourselves issued, I think, close to $3 billion of social bonds. But let me maybe just explain what a social bond is, because it's a nice name, but what does it do? So just like green bonds, raise proceeds where those proceeds actually go to, green projects, renewable energy or energy efficiency or others. Social bond is an instrument that aims at raising money and which proceeds go to projects that have positive social impact. And so, it goes to underserved populations, including women, low-income communities. We talked a lot about SMEs, of course. So a key part of the social bond, also goes to SMEs. So we do that on our own balance sheet, but also something we've been doing, including in the Philippines, by the way, a very nice project you might have read about it, which is we had Union Bank issue $150 million social bond, whose proceed also would go to SMEs. And that's what we're trying to do increasingly, is working with financial institutions, but also real sector companies, because it doesn't only need to be a financial institution that then, further on-lends that money to SMEs, says, and basically incentivize them to go to that market. But you can also look at real sector companies who do that maybe to raise money to build a hospital or other social infrastructure. So it's quite an interesting program, and we're seeing a lot more investors today. I think that's really the key, that are very keen on investing in this type of instrument. And I think that's what's really driving the market in the end. And then when you have more investors who are interested in the product, what does it mean? It becomes cheaper, right? So it's cheaper for the issuer to raise that type of money.
Okay. So again, it seems like it's not something new, but that could be a possible source for financing for companies that are looking at addressing specific issues resulting from the pandemic. Okay, thank you, John. I know we just have about 2 minutes, but before I give you guys a chance for your closing statement, let me just throw a final question to Anthony. So we have all said that technology plays a big role in moving forward, right? Companies have, and even small SMEs have adopted new technologies because they need it to survive. They need it to be able to continue their businesses. Now, some of these solutions may not have been carefully thought of, right? It might not have been in the, it wasn't part of the strategy planning or any careful studies that was made to pursue a transformation plan. What advice can you give to these businesses in terms of, I guess, validating that what they have selected is the right technology for them, and that this is the right path to a transformation that is going to be long lasting and sustainable?
Well, I think to what Matthew was saying earlier as well, it's less about individual technology. Certainly everyone was moving fast and everyone did what they needed to do in order to survive and keep the wheels on the car if they could. It's not about point solutions anymore. It's really about integration and ultimately a strategy. So I think what organizations should do is what they should do in best practice planning anyway. And that is have a vision of where they want to get to, how they want to get there, and then what structures they need to put in place to get there. Even if something isn't completely integrated now, the technologies are there to enable far easier integration, greater flexibility, agility. It's going to be all around sort of now stepping back and sort of planning more in a more structured way, introducing strong, robust governance around it. And then, no, I don't think any decisions that were made in the recent past will have a negative impact necessarily if organizations do that.
Thank you, Anthony. Thank you so much. This is really a very interesting conversation, and I'd like to give you, our distinguished speakers, a chance to express your last messages to our audience. Maybe we can start off with John, then Matthew, Anthony, and Philip.
Thank you, Marivik. Really, again, thanks for having me. And I think this was a really good discussion about what the future could look like. Of course, I think nobody has the answers, but we've been witnessing a lot of really good changes. And I mean, maybe the message I can just leave with the audience here, because I think there's a lot of our clients or potential clients here or partners, is that I think we need to work all together to go through this and to make the future better by talking with each other, by finding common ground and building visions for the future. So I think that dialogue will be very, very important. Thank you.
Thank you. Matthew?
So thank you. It's been a fascinating discussion. It's not my first time at FINEX, and I always find it a very invigorating experience, and this is no exception. I want to echo what Jean-Marc is saying. There's so much potential, but there's also the temptation, especially if you look around and you see how big some of those companies have got in China or some of the other dominant giants in Southeast Asia, to try to say, well, what can I do? How can I amass more and more? What we've learned is the real game-changing technologies are like the internet, are things that have been able to evolve interoperable standards where everybody benefits. There really can be a rising tide that lifts all boats, but it's a difficult vision to put in front of that very powerful, I can do something, me, as a big fish in the Philippines. And I really think we have to try to find these ways to build interoperable structures, platforms where we can share information responsibly while balancing privacy and data potential, where we can promote cooperation and we can combine the resources that exist in the business sector and we can coordinate with what government needs to do for compliance, with whether it's with fiscal, whether it's with other aspects. And that if we could create those sort of open systems, then the sky's the limit about what we can do. And that's why overall, I haven't talked much about India, but India to me is the tortoise to the hare in the fable. China's the hare. It's gone really fast. Now they feel, we've got these massive companies. How do we figure out how to control this? And America's a bit like that too. But India's been very slowly developing this common infrastructure. And I say, watch India, watch what's going to happen, because you might start seeing the benefits from these interoperable systems Just like I remember 3 decades ago, people told me India will never have a microfinance industry, because they just dither about it and want to make all these joint structures and things. And Bangladesh next door was exploding with Dr. Yunus and stuff. And then India suddenly has one of the biggest industries in the world, but they got to it at a tortoise's pace. So to me, it's showing the potential of trying to work together, trying to find common infrastructure that you can invest in, and trying to coordinate between the public and the private sector to reinforce that. I think if you can do that in the Philippines, there's no shortage of technological savvy in the Philippines. There's no shortage of entrepreneurial spirit. There's no shortage of goodwill. But I think the coordination needs to happen now better than it has.
Thank you, Matthew. Anthony?
So I've been talking a lot about technology. One of the things that I haven't covered is a lot of our research that we've also done in the last 12 months around mental health, loneliness, diversity. So we've just brought out our second Women in Leadership study. We've done a lot of research on racial issues, and also a major study on LGBT+. I think one of the questions that came up was really around mental health, and one of the things that some organizations are realizing that they're starting to pay a price. Organizations love to say we put our people first. Relatively few do, and they're starting to pay the price of that. We're seeing a major, as we all know, there's been a major spike in mental health issues. We're seeing in our data a massive commitment in some countries toward by organizations investing in mental health of their people and partners. In the United States, it's the highest. It's growing from like 2% of organizations 3 years ago investing anything in mental health to mid 80% doing it now. This is massive change. It's not happening in every country. All right. So what I would sort of close on is that the technology is really important and it's really happening, but the technology is enabled by people. And as Philip mentioned, people have been suffering. We've all been suffering. I haven't seen my family for 2.5 years, right? It's something that business leaders need to continue keeping a very keen focus on, because if that fails, then everything fails.
Thank you, Anthony. And last but not the least, Philip.
Sure. I think I'd like to close by remarking on one thing that I believe is common in all of us as we go through this experience in the different positions that we're in, individual, company level, country level. I think intuitively we know that there is an importance to doing good for yourself, for your community, and for the country, and for ultimately the world. I think this sense is what could help us create these wonderful intersections of ecosystems in a way that is beneficial. And it's not just about the almighty dollar or peso and so on. It's about doing good. I think we are truly living in a wonderful opportunity to really push for things that are ultimately for doing good. It's not just for commerce. So I hope that we can all push now in individual places towards that ideal.
Thank you. I think those are two very important ideas, building the ecosystem and using technology to connect us all together. When Matthew was talking about earlier convergence, I was thinking about this Grab driver that I saw outside our house, and he was going to deliver. And when he was asking me for the address of our neighbor, and I pointed him out, and he asked me, "By the way, ma'am, would you like to buy some honey?" He showed me the bottle of honey and some dishwasher cleaner. So he was really very entrepreneurial. And I said, "No, we have already those items." And he goes, "Do you need an electrician?" Okay. I think that's the real point here, that maybe before we seem to have compartmentalized activities and how we do things, but now we're seeing that we can do things in a smarter, right, and more inclusive manner. So Thank you. Thank you once again to all of you, Matthew, John, Anthony, and Philip. I enjoyed this afternoon, this morning, sorry. Phoenix members, clearly from this discussion, we can see that COVID-19 crisis has indeed changed our lives in a faster way in all sectors and all locations. It's not just in the Philippines. And there's no choice but to move forward, taking with us the lessons from this experience. Our panelists showed to us that all these solutions are actually known to us, but maybe with this common experience, we can move forward together. So as we end this session, I would like to encourage everyone to reflect and see how this pandemic has affected us or influenced the way we work or the way we behave in our businesses, and see if there's an opportunity to contribute to the betterment of the lives of our employees or our different stakeholders. Because only by acting on these opportunities can we truly say that we appreciated the lessons of this crisis. So thank you again. And I would like to encourage everyone to continue to attend the succeeding sessions that we will have in this conference until Friday. John, I'm turning back the floor to you.
All right, thank you, Marivic. So again, we would like to thank our very global panel of speakers, Mr. Philip Chu, Mr. Jean-Marc Arbogast, Mr. Matthew Gamzer, and Mr. Anthony Marshall. We'd also like to thank our moderator, Ms. Espanol, for ably moderating the panel discussion. At this point, we would also like to thank our sponsors for this year's conference who made this series of webinars and activities possible. Our partners, Divina Law, LT Group of Companies, and Union Bank of the Philippines. Our platinum sponsors, Aboitiz Equity Ventures Inc., Alliance Global Group Inc., First Philippine Holdings Corporation, NOAA Business Applications, Robinson's Land Corporation, United Auctioneers Inc., and Vista Land and Lifescapes Inc. Our diamond sponsors, All Day Supermarket, All Home, Ayala Land Inc., Meralco, and Reyes Takandong and Company. Our knowledge partner, KPMG, RG Manabat and Company. Our gold sponsors, Accra Law, Bank of the Philippine Islands, Cirtec Holdings Philippines Corporation, Converge ICT Solutions Inc., Navarro Ampere and Company, Deloitte Philippines, Philinvest Development Corporation, FTI Consulting Philippines Inc., Metrobank, Monde Nissan Corporation, P&A Grant Thornton, RCBC, San Miguel Corporation, Pilipinas Shell Petroleum Corporation, and SGV and Company. Our patron sponsors, BDO Unibank Inc., MegaWorld, Philippine National Bank, Security Bank, Wilcon Depot, and East West Bank. Our official broadcast partner, ABS-CBN News Central, and our print media partners, Business Mirror, Business World, The Manila Times, and The Daily Tribune. We would also like to thank everyone for attending today's session of the FINEX Week Conference. We hope that you will continue to participate in the rest of our webinars this week. This has been your program host, John Bauza of FTI Consulting Philippines. Thank you, everyone. Keep safe and healthy.